Welcome to Envisioned Broadcasting, the station designed to encourage, equip, and empower you for growth and success. Presents Women Emerge with Melissa Lambert, a show that shines a light on spiritual growth, health, purpose, and financial education. It's time to emerge and begin to live out your dreams, walk into your destiny, while making a difference in the lives of many.
Welcome to Women Emerge with Melissa Lambert. I am your host, and I'm so excited to come to you another Thursday. Happy Thursday, everybody. Oh my gosh, this is going to be a special Thursday because my partner in this amazing company is actually going to be sharing some great nuggets on today. As we always talk about, this show is being sponsored by Lambert Legacy Financial and is powered by Core Financial Partners. Our goal is to teach the truth about money, engaging individuals and families to think about and plan their legacy. Our focus areas are family, fun, and future legacy. This show will introduce you to experts, leaders, and motivators who will share their journeys and their stories through personal and professional growth, knowledgeable tips, and lessons learned that will empower you to grow. It is time, y'all. It is time to grow your mind, your spirit, your brand, your business. And now we're going to talk about your finance. I am excited because today's episode, we normally have this every second Thursday, we have the truth about money. And I really wanted to bring Mr. Tony Chamblee, who is the CEO and the co-founder of Core Financial Partners. I wanted to bring him on because I want us to kind of gauge ourselves because we're about to enter the month of September very soon, and that entire month is dedicated for the awareness of life insurance, and we truly want to give you the understanding about what the infinite banking concept is all about. So today we have the co-founder and the CEO of Core Financial Partners, Mr. Tony Chamblee, who will be talking about the policy loan with IBC. So welcome to the show, sir.
Well, hi. How you doing today, Melissa? Thanks for inviting me again.
It's always an honor to have you, Mr. Chamblee. I look at you as my mentor in this space. I always respect you and your lovely wife and your entire family because I truly believe you stand on so many truths. And I truly believe also that Core has so much to offer our community at large. So let's dive into, for those who are just tuning in and really haven't had an understanding of what IBC, infinite banking concept, is. So let's talk to the audience. What is IBC, the infinite banking concept?
Yeah, the infinite banking concept is really taking control of the banking function in your life. Right now, someone is controlling it, and unfortunately for most of it, it is not us. So the infinite banking concept is about controlling the banking function in your life. The way we bank at the traditional banking systems that we've become accustomed to, you're actually transitioning all of those funds and deposits and loans and things of that nature right back to yourself. So you'll be able to profit from the profits of what they normally get, you're getting now.
I love it. And I mean, I'm so happy because I remember when you went over my bank with me, I was blown away because this has never been brought to my table. I've never seen nothing like this. And I was in my seat like, is this for real? Just to see what my bank looked like for myself, but to see what my 12-year-old daughter's bank looked like, I was just amazed. And so today we're going to kind of dive into this process for them because Mr. Chamblee, I promise you, people only know about this traditional banking. They have not really adapted to the concept that they can be their own bank. You
exactly.
know?
Yep.
So I just want to make sure you kind of give them the idea of what is possible for them when it comes to IBC.
Yeah, sure. What is possible is really being able to leverage what you've put some sweat equities and tears into, which is building your wealth, building your capital, and, leveraging it versus using it. When we use it, it's kind of like you're restarting every single time that you reuse it. I always give the analogy of if you was in a race, like a marathon, and you went one quarter of the way past the start line, like you started and you went one quarter into the race, and you for some reason or another, you went back and started all over again, and you starting from the beginning again. But the thing about it, you're repeating that every few minutes, you're starting over again. Think about your finances being that way. And so what infinite banking concept allows you to do is have no interruption in the growth. Think about a portion of your finances, your annual financing, or your annual earnings, and you be able to put away about, give or take 20%, but yet you're recapturing it even when you leverage it or use it. And that's what infinite banking allows you to do. It allows you to do what the banks are doing and not what they say.
I love that. I mean, again, it feels so good to hear you say this, and it feels good. Reason why? Because I saw it myself. I saw the fact that I can put aside something that I normally put in my savings in a traditional bank. I can move it to my own private bank and use that and see the growth of that over time, not just for myself, but for my daughter. So when we think about just hearing the word loan, right? Can I borrow a loan? We normally go to the bank and say, like, prime example, I have my car loan through a Pacific Bank, and that's who I literally pay with the interest added over time. And also, every I have the car for 5 years, right? So we borrow a loan from a traditional bank and have this big interest added to it. And we're really paying like triple to five times more than the car is worth at the end of the day. Correct me? Correct me if I'm wrong.
No, that's correct. That's correct. When you tap into what you're paying back, the interest over years, especially amortization interest, you can easily pay 2, 3, up to 5 times what you paid for the merchandise or the service alone.
Wow. So let's dig deeper into IBC. How do you now really try to kind of borrow from this concept? How do you qualify for a loan when it comes to IBC?
Sure. Before I do that, let's share a little bit, Lisa, on why. Because why makes it all come together, right? The reason why, there's a terminology in the financial service industry that's not being taught to the layman, and I want to go over with you now. When it comes to the truth about money, there's a concept that's called economic value added. And the banks know all about it because they hire economists to make sure their books are accurate and efficient. But it's not being taught to the average person. So economic value added in the industry is called EVA. That's the acronym for EVA, economic value added. And what that is being how to leverage money. It's all about leveraging money, right? Your capital. Write this down if you're a person that is taking notes under the sound of our voice today. Economic value added is something that allows you to understand that capital has a cost to it. Capital has a cost to it. So if you're in a position to get a loan from an institution that's going to allow it, what you want to make sure you're positioning to be able to do is that your money that you have growing is have a equal or better return on it than the cost of interest on the loan, right? Because most of us are getting loans that you're going to pay what is called amortization interest versus simple interest. These type of loans that are being borrowed are simple interest, and that's a whole nother talk for another day. Simple interest mainly only recycles annually what the balance left over is. Amortization doesn't. It's going to continue to charge you the entire cost of the loan. That's the simple way to explain it. So when it comes to borrowing money from an insurance company for IBC, you're going to actually still get gains higher than it's costing you to borrow money. In other words, your account might be growing, your savings might be growing at 7%. Let's give you easy math, 7%. The loan is only going to cost you 4%. So if you take away 4 from 7, you still get a net gain of 3% on your capital inside of this account. So you can go buy a car with this money and still get a net gain of 3% of the cost of the car. Think about that. That means you're building towards wealth. That means you're not starting all over again back to almost zero. And that's what economic value means, is I am gaining more from my account growth than it's costing me to borrow money from someone else for a need, want, or desire, such as a merchandise purchase or a service that I needed. So just think about that. It's real simple. It's practical. It's just never been taught to us.
Wow. And that's the problem. And that's why I'm so thankful that CORE does exist. CORE Financial Partners does exist, because we educate before we take your money. We educate. We are so big on knowing what's around, what's going on, knowing the truth about it, so you can make the wisest decision, which is to help you see the full financial growth now and over time. So I love that you kind of really dig deeper into that for us. So now give us an understanding, now that we know that, how do we really truly qualify for these true loans? And in the process, what is the interest rate that really comes with this type of loan?
Sure. Really, really good question. You qualify for it by setting one up, getting approved, and setting one up. And when you get it set up, you fund it. You got to fund it with your savings, right? So once you fund it, you have a position of getting a guaranteed loan. It's guaranteed, right? So getting qualified, right, it's really not like a traditional loan. Once you if you got approved, the rest is all about you funding it. Whether you funded it monthly with a portion of your earnings, or you have money you already saved somewhere else and you move it over, invest somewhere else and you move it over. And here's what you need in there. What you have in there, you can borrow up to 92%, right? So the qualification to being able to do it is have it funded enough for what you need, and you can use up to 92%. And last thing I want to say is, you do not have to qualify through your credit worthiness. You don't have to. They don't pull credit reports. They don't check your earning potential, right? They don't look at your debt to income ratio. None of that comes into play. You're in position by just setting it up, making sure it's designed properly through someone that's certified and qualified to be able to do it with you. And our firm is full of agents with that and consultants like Melissa, and you'll be in good hands from that point on to be able to say, I need a loan based off of what I put in there. And let's say you have $10,000 in there, you can get up to $9,200 of a loan. And that's how you qualify. Just setting it up properly, make sure it's properly set up, and make sure that you do the math to see what is 92%, and you can call for that loan, and then that loan will appear in your account.
Wow. And when I want people to understand, when they dump their money into this policy and they have the access now to, say, borrow from themselves and get this loan at 92%, are they touching their own money that they dumped in, or whose money are they actually, are their money being interrupted when they actually take a loan?
Well, that's a great question. The funds that you're going to get the loan from is not coming from your account, because remember, you built up an account. Let's say it's $10,000 once again. It could be 100, it could be a million, but 10,000 is easy math. You have 10,000 in there, and you borrowed 9,000, right? Well, that money is not going to be touched. That's in your account. That 10,000 or 100,000, whatever you have in your account, is not going to be touched. The loan is going to be coming from the insurance company's general account. So when they wire that money, right, or transition that money into your account, it won't be your money being touched. So your $10,000, it's still in your account, accumulating and accruing interest on an annual basis. And so what that allows you to do is, a key phrase is, have your money grow uninterrupted. Too many of us build money up somewhere, save it somewhere, just to go get it and use it for something, a need, want, or desire. You don't have to worry about that now, because now you can leverage your money Y'all know that terminology of OPM, other people's money. Well, this is the ideal form of that. Insurance company allows you to do it with no questions asked.
Wow. I mean, again, this is just truly amazing. You are tuned in and listening to Woman Emerge with Melissa Lambert. It's just truly an honor to always have every month, on one Thursday out of the month, and you're going to hear him more often in the month of September. Why? Because September is a month of insurance awareness, and Mr. Tony Chamblee, who is the CEO and the co-founder of Core Financial Partners, is my best expert ever when it comes to financial literacy. And I'm glad to know that he's here. And we're talking about the truth about money, and we're talking about the IBC policy. We want you to understand you can have access to your own money without asking permission, okay? And we talk about just getting the loans and knowing that is 92% they can borrow from themselves. They're not really touching their money. Is there any interest rate added to that loan when it comes to this type of funding?
Yes, it is. There's a predetermined interest rate from most accounts, give or take 4. We're talking about the ones we're partnered with is 4%. So that's pretty much national average of 4% of the loan, of what you're going to pay for borrowed money is 4%, and it's already predetermined. And it allows you to kind of be able to do your accounting and to be pinpoint on because of it.
Wow, that's amazing. And I like the fact that we still also, at the end of the day, when it comes to this loan, we still have control. We can actually borrow from ourselves, pay back ourselves. Do we have how we are set to pay back the banks at a certain time of the month? With this loan, do they have to pay back themselves on a certain time of the month or a certain time of the the year? How does that work? Because people need to understand the control they will have with this type of policy.
Sure, great question. This concept, infinite banking concept, is also called becoming your own banker, and the reason why we use that terminology and coined it that way, it's because you are your own banker. When you're your own banker, you are controlling the banking function in your life. And controlling the banking function in your life means that you determine your payback. If you get a loan from this particular partnership with the insurance company, you're paying it back at your discretion. You're making your own installment loans set up. You're not waiting to get that, installment, book or to set it up according to someone else's way of seeing what minimum you must pay every month. That's up to you. You decide how much what the minimum is, what the maximum is you want to pay, or what is you want to pay at all. I remember when the pandemic happened, Melissa, a few years ago, and our clients that had well funded their policies, and they were thankful for that because a lot of us could not go out and work. And some people depend on that, and they was able to now use their money as income, use their policy as income without disturbing their money at all. Think about that. Now those that didn't have this dipped into their life savings to take care of their family. People that have IBC set up didn't have to do that, and it allowed them to do it and leverage it. And leverage it forever. And then those that had loans, here's the other side of this, had loans out, didn't have to worry about paying it back yet. They was able to wait till the pandemic has settled in and settled down and everything went back to normal, then they pay it back. So you can get a loan today, Melissa, and not decide to pay it back for a couple of years. Now, you want to be an honest banker, and I'll go over that in a little bit, but in this scenario, they didn't have to pay it back. They can set it up. I'm not going to pay back until I go back to work, get back on my feet, get everything back, where it needs to be, and then I'll start making payments. You have total control of that, and that is a beautiful thing when you're the owner of your own bank.
Drop the mic. Ali, come on. Did you guys hear that? Like, you have control. You have control. And just imagine the amount of people that was in debt over the pandemic, the amount of people that really could not pay their bills because they were fired or they were let go, and they had no other choice but to depend on credit. Just imagine how they came out of this compared to a person that had their own infinite banking concept. They had their own IBC bank, and they became the controller of their own money, paying back when they can, not being forced to pay back because this bank is saying, listen, I need my money now. We have full control here with having your own IBC bank. So, Mr. Chamblee, when it comes to explaining the collateral, can you explain collateral when it comes to having a loan like this?
Sure, absolutely. You have a collateral position based off the fact that you're funding this policy, and every dollar you funded with, for your savings portion, is called cash value inside the contract. You also it's calibrated and set up to build up your death benefit at the same time. These are done so different that most people that even know about life insurance or even sell it, some of them that even market it, don't know how to calibrate it like I'm talking about through Become Your Own Banker or Infinite Banking Concept. So we've set it up for every premium dollar that even goes into the cash value is building up the death benefit. So in the scenario of you having a position of collateral, meaning it's not your money that they're using, so they're collateralizing while you're living, they're collateralizing your cash value. So meaning if you have $10,000 in there and you borrow $9,000, they collateralize the $9,000, so you can't go back and use that again. You only have the $1,000 available to use if you needed another loan, right? So that's the collateral. But when you pass away, remember, these dollars bought a ton of death benefit, right? You might easily have $500,000 to $1 million of death benefit. Well, if you pass away without paying the $9,000 back, they just going to deduct the $9,000 from the death benefit and give your beneficiaries the remainder of what's left. So in other words, if you have $500,000 and you had an outstanding loan of $9,000, you passed away, your beneficiary will receive $491,000 versus $500,000. That's how it works. So collateral position is the cash value while you're living, and it's the death benefit when you pass away, and the loan is still outstanding.
Oh.
And the thing about it, real quick, to complete the thought on this, your $10,000 is always there, growing and earning and accruing interest of whatever is being given, which is around 7%, give or take, always.
I love that. I love the fact that, okay, so basically the collateral is the insurance policy.
That's correct.
Wow. Woo, I mean, I hope y'all getting excited about this, because to have your own bank, it was real to me when I had my own. When I did not have my own, it was like, okay, got it. But I promise you, when you see your actual illustration and you see the age that you are and you start seeing the different ages once you know, I'm 40, it will go at my age at 44, right? And go all the way to like when I'm 60, I can see how much my money, my cash value has grown. Even my death value, my debt benefit has grown. It blows me away. So I'm hoping that everyone that's listening and tune and understand the power that you have doing what the bank, not what they say, but do what they do. So what type of insurance policy is this being done through? Like, I know that we're talking about life insurance, but what policy is this done through?
Yeah, the type of company and policy it is a dividend-paying whole life company using a whole life policy. Let me say that again. Dividend-paying whole life insurance company that's only using a whole life policy. And the reason I'm making a specific, in detail explanation of that is because it's under what we call permanent life insurance. And there's two types of permanent life insurance. There's whole life and there's one that's called Universal Life or Index Universal Life, IUL. Well, when it comes to become your own banker or infinite banking, the only of the two that this could be done, or any other product could be done, or setup could be done, is a whole life policy. It does not work to build and control the banking function in life with the IUL. And there's many reasons because of that. We have a talk on another day, possibly, Melissa, if you allow it, when we talk about the difference in the two. But right now, it's only done with a dividend-paying whole life company's insurance policy of a whole life structure policy.
Awesome. And so with Core Financial Partners, we deal with this amazing company that is always on top of their game, Emeritus. Have they ever missed a dividend at all?
No. They've been in business for over 120 years and not have missed a dividend payment yet.
Wow.
So that means the growth is of a properly structured contract / policy includes the growth would be the dividends. Interest is already a given. We talked about that. Give or take 7%. The 7% is not just all interest, though. The 7%, we say that confidently, is because we including the dividends, right? And including the dividends, it allows you to know that you're getting a fair rate of return on your money. It's not something to say I'm going to get wealthy from, which it can happen over time, though. But it's there to know that your money is going to be guaranteed. It's going to be a guarantee that it's going to grow, because in these type of contracts, your money is guaranteed. It's guaranteed to grow. Everything about a whole life contract is guaranteed other than one thing, and that's the dividends. Everything else is guaranteed to happen. However, though, as you mentioned, Lisa, the dividends has not been missed since well over 100 years. They have not missed a dividend payment. So that means we're more probable to get the full growth of it because of what the history says. They are very sound on their bookkeeping and the way they're handled their financial affairs, and we believe we have the right partner when it comes to this type of setup and this type of concept.
I agree. I truly, truly agree. And I like the relationship that's been built with Emeritus as well through this. So, again, you're tuned into Women Emerge with Melissa Lambert. We have the honor to have none other than the CEO and the co-founder of Core Financial Partners, Mr. Tony Chamblee. And we're talking about the truth about money, but we're also gauging in on the topic about the policy loans with IBC. IBC stands for Infinite Banking Concept. I don't know why I just got stuck right there, but I just get excited because I truly believe, we haven't been in the know, Tony. Like Mr. Chamblee, like people have been, this information has been hidden from us in so many ways. And I say hidden from us because it has. If it wasn't because of you and the knowledge you learned, you and Mrs. Chamblee, you and Latoya Chamblee, I would not know this information. And I'm so grateful that you decided to learn this information, not just to learn it, but to teach it, to open up a firm that stands on the belief. You went to not just one area of getting your license as a life insurance agent, but you also went through the Nelson Nash Institute and became a practitioner to learn how to formulate this type of banking. So I appreciate you, sir, for just the knowledge and the wisdom and just for you opening up yourself to teach us so we can do better when it comes to our finance. So thank you, Mr. Chamblee.
Well, I appreciate you even mentioning that, and yes, I see the need and the importance of everyone knowing the truth about money, and this is a part of it. And I just commend you to want to put this out there publicly and be a part of Core in a way of making a living while making a difference.
Oh, absolutely. Making a living while making a difference. And I
That's
will
right.
shout it from the mountaintop. I am so sold out with Core Financial Partner to really, really be on this crusade to help as many families understand the power that you have in front of you. You can have your own private bank. You can protect your family legacy. You can make a difference. You can actually have the Rockefeller money where it's left from generation to generation to generation. That's what we're doing here with Core Financial Partners. And I'm just so thankful that I'm in the learning stage. But as I learn, I promise you I'm taking you with me. I'm not the stingy person, Mr. Chamblee, that want to keep the knowledge to myself. I want you to teach me so I can teach others. And I'm so thankful as your student, I'm learning the impact of how it's going to change my life as a mother, my life as a daughter, my life as an individual, so I can be a benefit for so many people that's coming along the way with me. So I'm going to get into this other question because I really want them to understand, can we be declined for a loan when we actually look to get a loan with our IBC?
That's another good question. And no, you cannot be declined. Once again, becoming your own banker gives you the control of the banking function in your life. And banking is about loans and repays and things of that nature. And you have the opportunity and autonomy to decide on a loan as long as you're funded, as long as as long as you have the capital in your policy. You cannot. It's a contractual guarantee. I'm going to say it again. It is a contractual guarantee that you can always get a loan up to 92%. And no matter what the insurance companies are doing with the money, they have to recall, reposition, and make sure you get your loan in a timely manner at all times, and that's a part of the contract. So, no, you cannot be declined from having a loan.
Wow. That's
Let me
powerful.
say one more thing on top of that. It's something called collateral capacity. Write that down. Collateral capacity is set up almost like it's like a line of credit. When you go back to the $10,000, you can get a loan, as many of them that your capital in your policy allows. In other words, if you have $10,000 in there and you borrow $2,000, your capital capacity is $8,000. You already used $2,000, just like a line of credit from a credit card. If you use $4,000, your capital capacity is $6,000. You already used $4,000, so you only have $6,000 left. You can call for another loan. You can call for another loan for $1,000. Now you got $5,000 left. You can get as many loans as your capital capacity allows you to.
Oh, gosh. I love that. Oh, my goodness. As many loans, as long as your capital is there, you can get as many loans as you want.
That's it. Absolutely.
Wow. Okay, So again, we're talking about the policy loans with you having an IBC, which is infinite banking concept. You having this specific private bank, you have access to borrow from yourself and pay yourself back as many times as you want. And as Mr. Chamblee just shared, you cannot get declined or denied for a loan. As long as you have capital, your money is there. You can get that 92% loan right away. And does it take 24 hours, 48 hours, 72 hours? How long would it take for them to get, once they apply for the loan, when will they see that loan in their account?
That loan can be in that account anywhere from 7 hours to 7 days. It depends on the urgency of your need to get it. You can get it expedited and have it in your account within 24 hours. If you do a normal transaction, it can take up to 7 days. If you tell them it needs to be expedited, it could be somewhere in 3 to 5 days. So anywhere from 7 hours to 7 days.
Wow. I mean, I really love that. Again, you can see that value of what you have here, knowing that you have the full control, knowing that this is your money, knowing that, you are borrowing from yourself and you can pay yourself back. I mean, that is just power given back to you. So when it comes to recapitalizing on your loan, can you share a little bit about that, sir?
Sure. and this is a huge component to become your own banker. Recapitalizing means that some might take advantage and hurt the banking function that they're controlling by not paying the loan back of the principal or the interest. The one part that you always want to pay back annually is the interest, right? Because it's an interest-only loan, right? So if it's an interest-only loan, if you pay the interest back, you're not going to compound the cost of interest. If you don't pay it back, you're going to compound the cost of interest. So if I have a $10,000 loan, let's say $1,000, let's make it easy math. I want to give you easy math. It goes back to the economic value added, but this is the reverse of it. If you don't pay the interest, you're losing the economic value added of getting a surplus. If your gains was 7 and the loan is 4, you get 3% net gain, right? But if you don't pay the interest back, you're compounding the interest to the next year, and then you can even make it worse by doing it year after year, not at least paying the interest back. If you have $1,000 loan now, 4% is what the loan is going to cost you. That's only $40, right? That's $40. Pay the $40 on the interest of that loan. If it's $10,000 loan now, that's 10 times it. You're paying back $400 for interest, but your money in your account is going to make you $700 on a $10,000 principal in your account, and you gaining 7%. So you want to make sure you have net gain on every opportunity you can. So recapitalization means when you don't pay the interest back, you're compounding the interest costs.
Wow. That is, even that part alone, I would love for us to kind of stretch that another time when we do talk, because, again, we want people to be in the know. When you know this information, you have a clear understanding of what you do have. Because my goal, Mr. Chamblee, is to see thousands of families being able to say they, too, have their own private bank. Like this year, already, between now and by the end of the month, I will have 4 banks, 2 for Chelsea and 2 for myself. That is powerful for me to know that I started myself out with my 4 banks, right?
Right.
Everyone have the option to do that. You bank with whoever you bank with. That's not your name. That's the traditional bank, which I get it. We all learned the traditional way, but we was indoctrinated so long that we think it's normal. It's not normal. So Mr. Chamblee, I want you to close us in by telling us about Core Financial Partners, because we exist to really impact so many people. So tell us a little bit about what's behind all this. Who is behind all this, and what we offer at Core Financial Partners to really help people not only just understand, but to actually start up their own private bank as well.
Sure. Core Financial Partners has the meaning of core. There's a meaning behind core, and it stands for Coalition of Rising Entrepreneur. Whether you really have started your entrepreneurship or entrepreneur spirit yet, you and I want to be an entrepreneur when it comes to our own finances, right? That's what that's all about. People, business, dreams, right? So what the real cornerstone of Core Financial Partners is financial education. As you mentioned earlier, Melissa, that we've been indoctrinated. We're here at Core to reverse the curse of indoctrination and turn it into what it's supposed to be, which is financial education. And what is happening is so many things are working against us when it comes to what should we do with our money, how should we handle our money, and what's the relationship with money. We are now getting the truth and getting it out there as fast as possible as we receive it and understand it. We're seeing people all over the country, lives be changed because of the nuggets, the nuances, the understanding of what's really going on. My mentor poured into us that when you know what's really going on, you know what to do. And some of the things are really practical. Some of the things are already right under our nose, right? But we're looking at it different, right? We're looking at it. They're steering us so many of us to qualified plans of 401ks and Roths and IRAs and things of that nature when the blueprint to wealth, right, is right under our nose. Let me give you a clue and a hint real quick on that. If you study what the banks do, because my mentor said to me this years ago, When you look at banks, don't do what they say, do what they do. When I study banks, do you know banks own these type of contracts, these policies, more than an average citizen of the United States, or all the citizens of the United States probably put together? They put more money in these policies and borrow against it, get loans to take care of their need, wants, and desire. Even they pay the benefits of their employees through these same policies. They don't pay out of their cash. That's going to be gone forever. They get a loan, and they still get a net gain off of the benefits they're paying out to all these employees. So corporate America got a hold of it. They call theirs corporate-owned life insurance, COLI. Banks called it bank-owned life insurance, BOLI. BOLI and COLI, Google it, and you're going to be floored on how much information is out there already on this very same concept, but it's not being driven to you and I. And that's what CORE is here for. CORE is here to take it to the public, the people like you and I, to make sure we all getting this information and being able to leverage it as well.
Wow, 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 wow. And just alone with the mission to really take people from survival to security to success to significance, those 4S alone, I just love what we stand on. I just love how we are not just, we have to look at people and see them for where they are, but we're going to also take you where we know that you need to be, which is through significance, which is legacy. So I know that we actually do have some sites that we want them to go to and watch some videos. How can they really kind of get this information the more? I know that we have our Learn More report. Can you just give us some different sites that we normally send our clients to so they can actually take the second look at this information as well?
Sure. I'm going to give them 3 quick links to go to the sites. The first one is our company's site, corefinancialpartners.com. Corefinancialpartners with the S.com. Right? You'll be able to see on the homepage. You go to the homepage, there's a few videos that are kind of rotating that you can watch. Then there's learnmorewithcore.com. Learn More with Core is a video series. It's about, 13, 14 videos on there that are only 2 to 4 minutes apiece, that we broke it down in bite-sized pieces to understand the different concepts that we went over today and some things that we didn't have a chance to talk about today. Right? And the last one would be, if you want to see how to be debt-free, and it's including your mortgage, go to coredebtstrategy.com, coredebtstrategy.com, and watch a 12-minute video that's going to break down how you can use the infinite banking concept to get rid of all your debt and build your wealth all at the same time. And I really believe those 3, if you go through those 3 educational videos, those 3 sets of educational videos, you'll be so sound in understanding and knowing that there's something here for you and your family, and also for entrepreneurs, your business as well.
Wow, wow, wow. Thank you so much, Mr. Chamblee. Again, you are tuned into Woman Emerge with Melissa Lambert. The show has been sponsored by Lambert Legacy Financial, powered by Core Financial Partners. We exist for you. We are dedicated to bring financial awareness. That's why Mr. Chamblee is here. We want to bring financial awareness to the community through infinite banking concept. We teach the truth about money, empowering individuals to think about and plan their legacy. Our vision is to be a beacon of financial education, transforming lives by instilling knowledge and confidence when it comes to your financial planning. We aim to create a community where everyone is equipped to build and sustain a legacy for generations to come. So I'm so thankful for you, Mr. Chamblee, for tuning in, for always being ready to share. And today we talked about the infinite banking concept, how you can actually take a loan from the policy, from your own policy. So Mr. Chamblee has given you 3 homework assignments. Go to all 3 links. I'm going to put everything in the description just in case you missed it, so you can at least have that information handy. If you find this episode, again, I hope that you find this episode very helpful. Share this with a friend. Let us know. Follow me on Facebook at Melissa, Mellisa S. Lambert. Also, book a session with me so we can talk about how you can get this information the more, right? Go to CoachMelissa.com, Coach Mellisa.com. Thank you all again for tuning into this wonderful session with Mr. Chamblee. We talk about the truth about money through the IBC way, infinite banking concept way. We want you to have your own bank. We want you to be empowered. We want you to be uplifted and be able to have a legacy for your children. So again, tune in to us again every Wednesday at 5 p.m. Eastern, every Thursday at 6 p.m. Eastern. You can find us on all 12 top podcasts at Women Emerge with Melissa Lambert. Until next time, y'all, I'm excited to know that we're going to help as many families get their own bank. So we want you to be one of those families. So thank you so much again, Mr. Chamblee, for tuning in again and sharing this wonderful information.
I had a blast, and thank you for inviting me.
Absolutely. Until next time, guys, take care, take charge, and continue to be great. Bye for now.
Thank you for listening to Women Emerge with Melissa Lambert, where Melissa speaks with leaders, experts, and motivators who share their journeys and their stories through personal and professional growth, knowledgeable tips, and lessons learned that will empower you to grow. Follow Melissa and Women Emerge Network on Facebook, Instagram, and TikTok at MELLISASLAMBERT and at Women Emerge Network, and visit www.womenemergenetwork.com. Remember, when you know better, you can do better, especially when God is for you.